Welcome back, traders. Hope you are all doing fantastic and had an amazing week. In today's episode, we're going to be discussing 3 different forms of market structure. So let's dive in. So the 3 different forms of market structure are swing structure, internal structure, and fractal structure. So regardless, any strategy that you utilize yourself, if it's Fibonacci, if it's supply and demand, if it's whatever ICT, market structure is always important to understand because it just represents the overall order flow and the overall way that the market just simply moves. We're going to start with discussing pretty much the most important form of market structure, which is swing structure. And when we talk about swing structure, there's one word that's very important to remember, and that is something called a BOS, and it's a break of swing structure. And a break of swing structure, very important to know, focuses only and purely on candle closes. So we don't focus on the overall wicks of the market. No, every single time we see a break of structure, so those are the blue line or the black lines with the 4-hour marked on them. Every single time we see a candle close above that line, that means that we have a break in swing structure. So over here, over here, over here, in towards the downside, back in towards the upside, that is when we have a break of structure. So then when it comes to internal structure is also known as an IBOS, and it signals that the swing pullback is about to start or is about to end. A good example of what an IBOS is for example, over here. Because what do we get? We get a break of structure on the 4-hour over here. Then what happens? We get that push in towards the downside. We get a pullback again in towards the upside. We do not see a candle close above here. No, we get an impulse back in towards the downside. So then we break this low. So we get a push in towards the downside. And this is also known as an IBOS. So this black line over here, that is known as an internal break of structure. And once we see an internal break of structure, so the candle close of this bearish candle over here, that is when we know that the beginning of that overall pullback from this low in towards this high is about to start. So then what you see, the overall market pulls back in towards the downside, back to that 50% mark. And then from there, we start impulsing and rallying back in towards the highs. Okay, now what we're going to dive into is fractal structure. And fractal structure or change of characters focus on wick breaks only. And we pretty much use a change of character to find out that the market is signaling to us that an internal pullback is starting or ending. So personally, the way that I utilize it, and we're just going to go into the exact same example as just now, is that if this is our swing structure from this low in towards this high, and we get a pullback in towards the downside, we get a pullback in towards this area of demand over here. So this is the consolidation, our area of demand. We pull back in towards discount. So we're now looking to continue the uptrend in towards the highs. When is then the right time to buy? Because a lot of people, what they'll do is that they just randomly start buying at either 618 fib or inside an area of demand. But why is this area of demand a good area of demand? And why can we long from it? And how do you increase your overall strike rate if you, for example, trade supply and demand? Well, the best way, in my opinion, is to utilize something called fractal structure. So over here, what happens is that we form a low over here. So why is this low of interest? Well, this low is of interest of this bearish candle because the bullish candle's low does not break the bearish candle's low. So in theory, what do we have? We have a pullback in towards the highs. So what I'm now looking for is another break of this low. So what do we see? We see a push in towards the highs. But then what happens? Again, a bearish candle. It means that we got a break over here of this low. So what then happens is that this becomes your fractal high, and it's going to make a lot more sense in a second. And this becomes your fractal low over here. And then I'm going to remove this black line. So then what do? We press play, and we see the market just consolidates inside of that area. Then afterwards, what happens is that we break the fractal high. So we get a break of the fractal high, and from being bearish fractal structure-wise, we're now bullish fractal structure-wise. So what happens at the moment that we see that bullish candle close over here, and I'm just going to replay one candle back, we can now see this as a break in fractal structure. And obviously fractal structure, like I explained just a few seconds ago, focuses on wick breaks. But in this particular situation, we get a candle close break. So now what I can recognize in here, and despite there not really being, let's say, any internal structure, because the overall internal structure is still just bearish, but the fractal structure, by breaking this high, has now aligned with the overall swing structure from this low in towards this high. So now making a pullback in towards this area of demand, providing us with a fractal break in structure, I now know that we formed a new area of demand over here. So this entire sell before the buy, that is now our new area of demand. And that is where I then want to enter the market with my stop loss below the fractal low. and my TP obviously above the next 4-hour high. So my fractal low, and this is again very important to note, is now the most recent low which broke that fractal high. And the most recent low which broke that fractal high is the low of this bearish candle. So as long as the low of that bearish candle is respected, we should continue moving in towards the highs. And that is why I place my stop loss, for example, over there. So what then happens is that the market taps exactly back in towards that overall sell before the buy. It still respects this low and continues in towards the upside. Now I'll continue mapping fractal structure for you guys. So now what do we see? A break in the fractal high. So over here, this is your fractal high, and this, again, it's very aggressive. This is now a break of the fractal low. So why is that your fractal low, and why is it a break of the fractal low? Because we get an impulse up, then you get a pullback, because this bullish candle fails to break the bullish candle's high, and then we get a push back up again. So this is, in theory, a break in fractal structure. But then in that same candle, we also break this low, and then we close over here. So now, let's see, and press play. What happens is that you push in towards the downside. But obviously, it's not logic for the market to continue in towards the downside. No, why? Well, because the overall swing structure is still bullish in towards the highs, right? And we're just coming from discount, this gray zone, and we're moving in towards the upside, which is far more logic. So it really shows how important it is to focus mainly on swing structure and not get caught up in identifying the overall fractal structure, because it just simply occurs everywhere within the market. So furthermore, obviously, it's very important how you utilize fractal structure, because fractal structure is purely just a way to trade in line with the overall swing structure. So again, we know the swing structure overall is bullish. Now, this was our fractal high over here, and the fractal high has now been broken, meaning that we now look at the most recent low, which broke this high, and that is the low of this bullish candle over here. So I now know that most likely this area of demand, because this is now an area of demand, because this sell before the buy broke this fractal high. So what happens is that we tap in towards that demand zone and we start moving out of it once again. So now my new fractal high becomes this high over here. So we break that fractal high. And now you must wonder, what is now my fractal low? My fractal low is now the low of this bullish candle over here. And why is that? Well, this is the most recent low that was formed before the impulse up to break this high. So remember, the most recent low that broke the fractal high, that is going to be your fractal low. So it's not going to be this low over here. It's not going to be this low over here, not the low of the bearish candle. We don't look at bullish or bearish candles. No, we focus on the most recent low. And why is this the most recent low? It's because it failed to break above this high over here of this bearish candle. You kind of see like a pullback and then a push up. Now we'll just continue out marking the fractal structure. So again, we have a new fractal high over here, and this still remains our fractal low. So what happens? Let's see. So we break the fractal high over here. So what is now your fractal low? Your fractal low is now the low of this bearish candle. Let's continue. Okay, so what happens is that you break the fractal low of this candle over here. And remember what I was mentioning, after break of structure, which we had over there, we expect a pullback in towards the downside. When can we recognize that a pullback in towards the downside is coming? That is when we see a break in the overall fractal structure, or if we reach a higher time frame area of supply, which we would or might have had to our left over there. And obviously, if you combine the overall supply zone together with that fractal structure, that is when it gets the strongest. Now pressing play, what happens is that we pull back in towards this last buy before the sell. We tap in and we move back down. And this was the buy before the sell-off, which broke this fractal low. And what you then see happening is, boom, we sell off straight back in towards the downside. Now, obviously, we've created a new fractal high. So this is now your fractal high break over here of that bearish candle. And what is now the fractal low? The overall fractal low is the low of this bullish candle over here. So what I'm now waiting for is to see what are we going to break first. Okay, so we break the low of this bullish candle, meaning what is now your fractal high? Your fractal high is now the high of this bearish candle over here. Then we get a push in towards the downside, we get a pullback, and we get a push in towards the downside once again. So that's fractal structure explained. Now let's continue on. So the last thing that I want to focus on is just internal structure one more time. So overall, if we look at what the overall market structure did at this point in time, I think this is a good example to showcase. What we can see over here is that we got a break of structure in towards the downside. Now what happens after break of structure? Obviously we expect a pullback. So we got a fractal break over here. What happens is that we push down a little bit and then we continue in towards the highs. Now, at this point, what happens is that obviously we're pulling back in towards this area of supply in the extreme. Again, some fractal breaks over here, which are indicating further downside is now possible. Now, pressing play again, what we're seeing over here is an internal structure break. So what happens is that internal structure is forming. So we get the push down, pull back, and then a push down. So after a low break over here, that is then an internal break of structure, because this is just internal structure. Sometimes people may note this down as kind of like the main structure. But again, if you watch the previous episode of this course, what you know is that if you get kind of like a trend in towards the downside, this trend on the higher time frame will consist of kind of like lower time frame trends inside the overall impulse. So the impulse is not clean like this, but the impulse will be looking something like this, despite this being your swing low, this being your swing high, and this again being your swing low. So once you kind of break this low over here, that is then, for example, the confirmation. Let's say the market starts pulling back up here in towards this area of supply, that you could also look for potential short from there further in towards the downside. So over here, what do we see? Again, after a break of structure, which we had over here, we expect a pullback in towards the upside, right? Because this is your swing high over here, and this is your swing low. So what's important is that this overall internal structure break, because we break this high, so this is internal structure, is that it happens pretty much at the 50% mark of the overall range, right? So we're always looking to sell in towards the downside if the overall swing structure is bearish, right? Because swing structure is king. So we get the swing structure, we pull back in towards this buy before the sell over here, which is your supply zone, and the internal structure is bullish. So a lot of people will be looking for longs at this point in time. So they'll be looking for longs from, let's say, this area of demand over here, because they'll be saying, aha, look, what we have a structure which is bullish. So we get the high, we get the pullback, we get the high, and now I'm looking to long from this area of demand because this is bullish structure. But this is just simply internal structure from the overall swing from this high and this low. And we're just forming simply an internal structure before we're going to most likely continue in towards the downside. So what happens is that you see, okay, we do see some reaction, but then we just keep on consolidating and eventually we push back down in towards the downside. So I hope you guys enjoyed this episode and that there was a lot of value to be taken from it. I wish you all a fantastic day and I'll see you in episode 3. Thanks, guys.